27th of January 2022. Trading recap. Okay, so we had a pretty good trading day today. We mostly traded the ES, did a few NQ trades, and did pretty well today. All right, so how was our trading today? I actually decided to chart some supply and demand zones, thinking I was going to trade them, but yeah, I don't know. I've not traded supply and demand in such a long time that I've almost forgotten how to trade with them. I instead traded this instead. So, as usual, I'll go through pretty much everything as I saw it. I mean, you can already see everything anyway, but I'll go through all the bars. But just prior to that, there are a few things I've learned about trading ranges. I use a 2-minute chart today to locate some really decent scalps throughout the day. And there's some really interesting things that were happening over here that I noticed. There's some interesting things happening here too. I learned how to trade off this. Some things that I discovered while I was trading. So anyway, what I'm going to do first of all, let's talk about generally the day. It started off with me taking a trade here and getting sort of scared and really messing it up and just being too eager to trade, something I really need to work on. All right, so yesterday we had the FOMC, big massive sell-off. Generally when we have that, sometimes we get even more selling. You have a massive breakout here, you're definitely going to get a second leg down. Nice pullback, second leg, and I watched this overnight. I remember seeing this sort of going out around 9 o'clock, and I thought, damn, I should have taken this, because I did consider taking this short, or at least I saw an entry short. I actually charted a supply zone over there, and it really hit it to the tick, which was really cool. This would have been a really good short. And I noticed sometimes when you see this, you should expect a bear breakout. When you do get the bear breakout, test of the moving average, and then just a nice short here, 3 pushes down, trading range here, or maybe you could even say here. It's not really a pullback, so here is the top of the range. But you actually had a smaller range here, went sideways for a bit, broke out, and became a small pullback bull trend. Pulled back here, and I think it was just a vacuum test of here. Came back, you had a small range, and then you sort of maintained here. So sometimes I've always struggled with trading a trend that's actually in motion. And here you can even see we're in a breakout. And I've always struggled with that whole concept of, okay, what do you do? Do you just wait till something happens? What do you do? And now I figured out that sometimes the best way to do it is obviously analyze what's going on. You could even do a measured move from here. Let me actually see what that would have yielded us. Did we get anything of significance? Not really anything, but yeah, you could. There's some things that are very interesting with bull trends, and that is the moving average. You've always got to check the strength of the trend based on how far you are from the moving average. If you want to get into the trend, it's always nice to get in close to the average price. And now I understand why when you have a big massive gap up, what you should expect. I mean, on this chart, we had a gap up far away from the moving average. And normally when we get that, we normally have either buy the closed bull trend, or we may even have a wedge top or double top, and we had a wedge top here today. We'll go into that in a second. So anyway, so I saw that and I really just did not really like what was happening here. I had to slow down. I know that there was sellers over here, because obviously we sold off over here, so this is like the selling price. And if we zoom out a bit, you can see we've sold off a lot from this level, from this area in general, this area of price. So today would have been no different. We're clearly in a trading range. Best way to trade trading ranges: sell high, buy low, scalp it. I always seem to miss this part of the range. I always seem to do most of my trading here and in this range here. For some weird reason, I'm always caught up in here. I'm always caught up in here. This part, I was exhausted, happened in the middle of the day, and I was sim trading and testing out a new strategy or a different strategy. which worked out pretty well. But it was just frustrating because I was like, man, I could have just shorted this and just tested the strategy on a different, computer or a different account. But I was already done trading at this point. And when I got here, I did a few more trades and decided to stop. All right, so what did we have again today? So we had this bull breakout. So clearly we have lots of buyers in this area. And then we had a bit of a pause here and then another bull breakout retest and then carried on. As you can see, we pull back. So chances are this price level or even this price level should be tested. We never really got down here in the end. So if we go through everything, we had a wedge top here. It's reasonable to go short here. I find whenever I'm listening to Al in his trading room, he doesn't give you a lot of confidence to take some of your trades. So you see this and I'm like, okay, without Al there, I would take this short. And he wasn't convinced this would go short because of this bar and how this bar had printed. So it made me a bit aware of taking it short. I actually went short on my real account and then took out some profits because of what Al said. And if not, I wish I had held, because all the losses I had made here, I guess would have made them all back here, but I didn't. I'm actually a bit disappointed I didn't. And that's the thing, nothing, you can never tell with anything. All right, so we had a wedge top and it came down to the bottom of the range, had a bear breakout. I considered even shorting it more and I had to stop myself because I kept saying to myself, I'll get in, get out, get in, get out. And I thought, you can't just do that. Just get in, and if you've missed it, forget it. You've caught your trade here already. What's interesting is this came to this area to test this price here, this area. So maybe this was the beginning of the spike. You think about it, 1, 2, maybe this wasn't the third, maybe this was the first, second, and third, whatever it is, came down here. Then we had another wedge top. In fact, we had a wedge bottom here. I counted it on the 2-minute chart and I realized that this was a wedge bottom. And then we had a wedge top form, but we had a lower high. 1 pullback, 2. Trading ranges tend to have 2 legs in them. 1 pullback, 2, 1. What was the second pullback? Maybe this was the second pullback here. Or you can say 1 pullback, 2. Maybe this itself is that, but But we had a lower high, and it came down when we had a higher low. So we formed a triangle at this point, and this is breakout mode. Kind of got tight over here. I took a few scalps over here, took some here, took here, and I find that with trading ranges, sometimes it's easier to just trade with a limit order. Yeah. We had this breakout. At this point, I'd already stopped trading. I was just watching it, and I was now trading the 2-minute chart. Okay, so we'll go to the 2-minute first. Because as you can see, it's a very strong breakout. 2 minutes. And what you have here, I find 2 minutes really good for scalping. So what you have here is a situation where, look at that wedge here. And why did I see maybe 1, 2, yeah, there's a pullback here, so therefore maybe this is, yeah, so you have 1 pullback, 2 pullback, 3. So this was another wedge here. But what was interesting was as we were selling off, I think on NinjaTrader I have a 10 bar moving average. So every time we'd come back to the moving average, that was a good sell. But I was using a tick chart as well, so I was able to see even the smaller the other pullbacks, but everything was all just bear bars. These I see bull bars. Oh, excuse me. Now you're seeing pullbacks, small pullbacks, and pauses. That tells you already we are losing momentum. I drew this line as a parallel of this line, and almost just trying to see whether we get a wedge here. We got here, and in my typical fashion, I thought maybe it would be good to buy the top of this bar. Obviously that did not trigger, but I always forget that there's always usually an overshoot, whenever you have these wedges. Alright, so you had this overshoot. The first thing I go remember is the first reversal is going to be minor, and it's probably going to, because it's so tight, chances are we're going to carry on the trend. And it's a two-legged pullback, one, pullback two, and then you now had price going down. I did not take this short. I thought we might go back up again. I actually forgot that this was the first pullback, not this. And price carried on again, one pullback, two, and then price carried on. So one, two, and then the third low. The third low being the wedge bottom. So this actually, oopsie, this actually being the wedge bottom. I should have also drawn this to find this low, because this was really good, and therefore this is now the low of the range that we'll most likely be trading from. So the best way to do this is use limit orders or stop orders for above bars, limit orders below bars, and you're scalping. So 1, 2, 3, reversal, and just scalping towards the moving average, bull breakout going even higher, nice wedge, 1, 2, 3, wedge go, excuse me, it's late. And then another wedge down, and then just taking, and then now you have a lower high, so you're forming another triangle. And these were just good scalps long. Here you had a bear breakout, but you know, as Al was saying in the room, this is probably going to fail. You know, it's a trading range. You get a lot of fake outs, and bulls will probably buy it. It will be disappointing. It's also quite late in the day. You know, it's almost the close. So this was a good one. Here you had a really nice wedge as well. If we just mark all these wedges, we have 1, 2, 3. Yeah, another one here. Yeah, so you just have all these wedges, which would have proven to be really good setups. It's easy to say now in hindsight, but that's actually how it was. And it's funny because whenever I see that, I can always tell, okay, this bar is going to be shorted. You know, you got three highs short the top of this bar, you know, and just bet that you're going lower. Put the stop here, make sure it's tight. Oh, excuse me. And we did that basically at some point today. I noticed that you can always take small scalps to, you know, scalp is probably just 2 points. You had more than 2 points on many occasions. And I probably should have gone for like 4 points. What else again? Yeah, so that was the day. And it's literally how I traded the day. Just those wedges. You had this nice bear trend. So you had a trading range here that became a bear trend, and then trading range. I did some studying here. This is a double top. I did some studying just now of Al Brooks's course on trading ranges, just to really get a better sense of how to trade these. And it's always a good idea. It's always, trading ranges tend to respect the ranges, as it were. So if you are going to take a trade here, you should just put your stop way down here and trade from the support or resistance. Here it looked like we had a breakout, but again, it's probably going to fail. Then, yeah, like I said, this would have been cool to just short, but you're so far from the moving average, but it's a strong breakout, so you can just use stop orders and just, you know, trade small. First break, first retracement, comes back, and I think that's where a smaller moving average would have been nice, just to have something to follow. Here we've gone too far, we corrected here and then carried on the trend. So moving average behaviors, the trend behaviors are really useful from that in that regard. I also took a trade here. I bought this candle and got out over here. I believe that's what I did. Oh no, I bought here, sorry. I bought this candle, got out at the top, and I decided I didn't want to do any more trades because, you know, I was flustered and tired, and I thought, I'm done. I've done enough for a day. Oh god, okay. Sorry, I'm recording my yawns on the mic. And again, literally, this is what trading ranges are. This price, if we go back to the 5-minute chart, I'm looking at the same thing because I think on the NQ it looks slightly different. Oh yeah, on the NQ it's different. Yeah, so this price here has been the resistance. You have a triangle forming over here. Maybe you have a breakout, I don't know. But you have this price holding as resistance, and then now we've kind of come down. It almost looks like a bear flag. Alright, so that was today. And Yeah, like I said, the thing I was going to talk about was just the fact that taking trades off the moving average is a very good strategy. Whenever you're in a trend, if you see price racing up, look at the moving average and just maybe wait till price comes to the moving average. Or if you take a trade here, you've got to put your stop all the way all the way down here. And of course, that's not what you want. So just being patient really is always important. All right.